Hello, everyone. Mike Arnold here, co-founder Pat Trading Partners, along with Bob Iacchino. Let's see if we get some lighter viewership now that the NFL season has started in the USA. So, I didn't get to see the end of the Bears game. I am doing a live stream instead. Good afternoon, Josh. So, don't anybody tell me the results of the Bears game. Anissa, good afternoon. Hey, options. Happy Sunday. Sunday. We had yelling a little speaking a bit ago. See, no, there's no rest on the weekends. We gotta do our prep. Hope everyone's ready for a fantastic trading week. Again, I appreciate everyone who can attend live. And I understand if you're watching it on demand, you might have some other things to do, some family obligations. Completely understand that. Please be able to watch it on the replay. If you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, you know what to do. Don't need to dwell on that. Good afternoon, Davey. I put up a stock sector overview, recorded stock sector overview. So if you're interested in that, please take some time. I tried to keep it brief, but it does have some good points in it and what to focus on with some slight potential more upside targets, especially at the beginning of the week. Happy Sunday, George. Well, I'm just so happy so many people are here. Hey, George, what is that picture next to your name? The next to Geo Mission. What is that? It looks like a motorcycle or something. Could you give me some context? Give me some context of that. All right, let's get straight down to it. This week, not much. You got consumer inflation expectations tomorrow, but that's the minor one. That's at 10 a.m. Central, so an hour and a half after the open. Tuesday is one of the big days. We got inflation rate, core inflation, CPI, everything related to that. That is a biggie. All right, we got that 1 hour before the open. So things tomorrow, we might see a little more upside. We still got cycles pushing to the top. And then I'm expecting more of a pause going into Tuesday morning. Please please do not forget about that. If you tune in here, I won't let you forget about that. Then we have the Investors Business Daily economic optimism. I just actually want to see where that's looking at. And we have minor of Redbook. On Wednesday, on Wednesday, the more minor one is the producer price index, but that will still be interesting. It's not as major as the CPI. On Tuesday, we got the mortgage stuff. The housing market's just really slowing down. We got our EIA numbers back to Wednesday. On Thursday, we have retail sales. That is important. So Thursday is, we got some important economic data coming up. Retail sales continuing and initial jobless claims. Remember, previous for continuous jobless claims was past our 1456K, which technically means we're going to dip into a recession, among many other things like the inverted yield curve and blah, blah. Even though people argue we're going to have a yelling this afternoon or about now, depending on what time zone you're in, was say we're soft landing. Forget that. Forget that. We also have Philadelphia Fed manufacturing. Going to see if that tips into contraction. And again, retail sales is a big thing on Thursday. Fed Philly, though, we'll keep an eye on prices paid and new orders, especially, and employment. Then we have industrial production, business inventories, and then Friday, preliminary consumer sentiment. Still, we're getting back out of summer, so I really want to see. Remember, I said the last time for August we should see a bounce with gas prices declining and, just a summer. Now we're getting back to school expenses, what's going on. I mean, food isn't easing up. Fuel's pretty much leveled out, so we're going to see how that comes on Friday. That's where we sit. So That's the next week. What else? Let me see here. Oh, hello, Amit. Hello, Raj. A guy on a bike in the PlayStation game, Motor Storm, jumping a ramp over City Skyline. All right, gotcha. So it's from a video game. Was wondering if you rode or anything. I used to ride years ago. Still have my motorcycle's license, but my wife doesn't want me to kill myself. By the way, it's my wedding anniversary today, 18 years of marriage. Met and married my wife in 6 weeks. Went through a Las Vegas drive-through, did not get out of the car. That was sort of fun. We planned it that way. It wasn't that. Uh, in case not why anybody would wonder, but in case you want to know how strange I am. Remember, you can't forget, Friday was a very strong day, but very low volume on Friday. Very, very low volume. So that's why I'm taking Friday's up move. Yeah, it was a nice up move, but with a grain of salt. FOMC, 91%. Remember, we start really paying attention when it's over 90%. And not this week coming up, but the following week is the Fed rate decision on the 21st. So that's going to be key. And also it was stressed on Friday, I forgot by which Fed speaker, that CPI isn't going to be one of the key players that they were thinking going into, because even on a better print still, and it's not going to really affect them. Don't pay attention to the green line. Pay attention to zero gamma 4114 as they don't update this till tomorrow morning. But remember, we closed at 4085. Really close to zero gamma. So this thing on any continued rally tips into positive gamma. And the OPEX isn't this week, but OPEX next week. Next week is massive. Massive. So we can't forget about that, even though we're 2 weeks away. Don't ignore it, because the 4,000 strike is a big gravity well. Fear and greed index. This is actually a really good tool for a counter indicator. But last time we got a little higher last time on the rally into neutral, but now we're back out of fear into neutral mode. And when we get into neutral mode in a bear market, I start watching for the more topping signs. It does not mean we can't keep going up, but we've already removed ourselves from fear. So neutral, that's sort of neutralized. No pun intended. All right. And more things I'm going to go over on Sundays. Current market valuation. Now, this is our aggregate score, and this is based off of just currentmarketvaluation.com. I find this handy. I just want to point something out. But I don't like their aggregate scores. Here's where we're sitting, though, in terms of, they're fairly valued to overvalued. So it's right in the middle of one standard deviation to zero. I really, though, look at some of these other indicators. The yield curve model, very overvalued, and I'll show you why I don't look at the aggregate so much, because I think it's more skewed. But this is a handy thing to check in on. The yield curve is still one standard deviation. We already had, we're up at a very overvalued market still. Buffett indicator, very overvalued. You see it skyrocketed after COVID, but we're still even pulling back that one standard deviation and bouncing off that again. I'm expecting this to eventually dip to negative one standard deviation or overall, but this is still very overvalued. PE ratio still beyond one standard deviation, very overvalued. Interest rates, this is where I start disagreeing. Fairly valued. I don't necessarily agree with the way they structure that one. Margin debt, don't look at. I don't look at this one at all. They say this market's undervalued for margin debt. We've had a pretty substantial pullback in margin debt, but this can get very. What happened? Ooh, I hit the wrong thing. This can go deeply. So this, I think, is slightly skewed for all the research I've done. And mean reversion, we're still at one standard deviation. And before this is over, I think we're going to see this below the green line. So overall, why am I going through that? Because if you start looking at things, we're nowhere near even a fair valuation yet. even on these rallies just make it more skewed. And by a PE ratio, and I retweeted some stuff this weekend, we're still roughly, we should easily at least drop to the 3,000. Easily, if not 2,900. And that's with still a PE ratio of about 15. I'm expecting if we really go into a decent bear market, we could even get that down to about 12 to 13, which could even be progressively lower. Why do I bring that all up on a Sunday? We're not going to cover this all the time, but on a weekly basis is helpful because even with these rallies, even with these low volume rallies, they're actually just giving the Fed more ammo to continue to raise aggressively. We're nowhere near, and people who say, well, the PEs have pulled back, we're at fair valuations or it should go back into long-term bull mode. No. Now, we can still get your rip your face off rallies, especially on the low, pathetic volume. And remember on these rallies to always look in at your meme stocks and the crap no earnings stocks, no PE ratio stocks, I should say. The more you see those rally and the more you see those ramped up, it's the short squeeze and just the undervalued momentum crap that it's still getting juiced. It does not mean you have a lot of long-term stable buying. This week for earnings, then I'll get back to comments. Tomorrow morning, not much. After the close, though, tomorrow, Oracle. Do not ignore that. Big tech. Tuesday, Wednesday, or Tuesday, Wednesday, not much. Thursday, though, Adobe after the close. So we're at the tail end of earnings season, but we do have Oracle and Adobe, so that, I guess some people still follow a light path and stuff. There's some minor things in here, but nothing major market moving. All right, let me get back to some comments. Where do we sit? It dawned on me why the market has been rising every day. Pivotal wins in Ukraine. Yeah, but that's... it can be a contribution, but people aren't buying crap meme stocks and short squeeze because of Ukraine stuff. We were also in cycle bottoms. We were oversold. And when this market, remember when we get this last major run up in August, we had the meme stocks leading. You had a lot of short squeezes leading. These last few days were one of the largest short squeezes since 2019. Also, do keep that in mind. And it was incredibly low volume. You can see here, there's the volume. Look at this volume, especially on Friday. Up 2% on this kind of volume. That is atrocious volume. Atrocious. My big word of the day. Thank you, Raj. Thank you, Martinez. Again, welcome. Hope you consider being a subscriber to this channel if you're not already. It seemed weird that Zelensky rang the bell the same day and saying what he said, the end of the war could be near and the market will go through the roof. I don't think Putin's going to give up that easily. And if the war was ended, you would see another substantial relief rally or this rally continue. I think before Putin gives up, we will see a lot more damage done. Thank you, Amit. George, do you have a way to overlay the Fed balance sheet with an S&P chart? There is a correlation on a longer term basis. I'll have to figure out how to do that or a site that does that. Historically, SPX PE 15, that's historically a mean or an average. I should say an average. It's more of an average, not the mean. But so a return to 15 would just be a return to average. We're still way above average. I think we're averaging 19 still. So we have a way to go to get it back to average, and a lot of bear markets overshoot average. I'm just giving it the benefit of a doubt for fundamental valuations, which would take us back to 2,900 to 3K. And that would only be an earnings compression to average. Mike, as you know, I only play options with the end of war potential in play. Buying puts is far too risky. So are calls. Uh, I not with low volatility because you could always put on as the volatility continues to collapse. You can always put on lower volatility non-directional plays that can still play out. I think people are stressing the end to the war slightly too much. I don't think it's going to end that quickly. Yeah, if the war does again, if you might, I think this pop actually going in with this pop on the VIX. Let me jump to the VIX. This that especially if we get a little follow through Monday, you know, even if we get some follow through on Tuesday, if the CPI is slightly better, any return to this low VIX area, I mean, even now, this is, you know, you don't want to try to nail the absolute low, but any pullback here with cheap volatility down in this range, down here, is a bargain volatility wise still for the end of September and October. Still a bargain from my perspective. Again, everything is, it's my live stream, it's my perspective. All I can say is the market is holding up very well given QT. Remember, quantitative tightening does have a lag factor a bit. And the markets, this is what, no, I didn't see many people stressing how low volume the rally was. It's just not, and it's not a broad. Yeah, you get some stocks popping back, more so stocks popping back above their 50-day moving average. But this is still a recovery rally. Could it go on a bit longer? Yeah. If the war were to end in Ukraine, could it get a bigger pop? Yeah. But it's just, again, I do agree with the one thing Options 22 said. We do get a further pop, there's going to be some major bargains for driving option positions for downward plays through even through the beginning of next year. We'll get to the dollar in a bit. I don't generally cover UUP. Remind me, we can peek in it. I cover the futures because of the structure of UUP, but we'll glance at that too. Hey, Coco. Oh, thank you. Thank you for the anniversary wishes, Options 22. I welcome uh, Tom. At a mean of 15p SPX at 3K, that means EPS for SPX would be 200. Very possible with earnings revision. Yeah, and I'm expecting the earnings to actually come in around 191. So that's why I'm slightly lower than that, but for longer term. But yes, that's where we would sit. That's why roughly over when we really start the next down leg, that's one of the key, besides the technical aspect. I don't even need to respond to these. Let's see. The stock U looks intriguing. Remind me of that. Is this low volume rise just short covering, in my opinion? A lot. There was just lack of sellers and short covering. Yes. And literally, there were sellers took Friday off. Now, back to this. If we are key targets that I'm watching for tomorrow, first is this 4094 to 4093, the same target we had on Friday. Above there, 4093 to 4105 is key. 4105 is the key area. And then if we do, and then the breakdown zone is 4130. Remember, once we get into this area, we're in positive gamma or at least neutral gamma. So you get the dealers aren't reinforcing either the rally or the sell-off. However, on a sell-off, you start dipping into negative gamma again. If we do get above here, remember I'm watching this area for a possible, this is possibly still a wave 4. We start getting closes above 41.30. That is getting off the table. The only thing that gets me sustainable bullish continuing is if we can maintain a close above 40.61. Remember, we got the buy signal back on the 7th. So at this point is trailing the stops. If it does get a close, with cycles still heading up above 40.61, then yes, I will target the 200 again and the 87.5. So nice how that works out. So this is not to get aggressive in this from my perspective with the bull market, for the bull rally. It's to maintain. Intraday plays are fine, but from a lower perspective, from a swing trade, it's ratcheting up stocks. Because anywhere between the 50 and the 62.5, we could have a rollover play, especially with daily cycles at the top. And weekly cycles not yet at the bottom. So we can see another push up and then a rollover. Also on the weekly basis, the 50 exponential is just above that 62.5. So I will be really starting to watch tomorrow as we edge up here going into Tuesday for any potential topping patterns. Other than that, it's trailing stops from the long side. On a pullback with the futures, my key support, minor support, I'm keying off the 1 hour rotation zone, which is roughly, you see here, it is 40.76. On a bigger pullback, let's see where we sit here. On a bigger pullback, I'll be watching roughly, let me fine tune this level, 58, yeah, roughly 40.58. Bottom of the 1 hour coming in with the rising 4 hour. And then the only other thing that gets me really into more of a pullback mode is below 40.26 because we have a gap fill, and that would take us to the bottom of the rotation zone. Watching for cycles on the 4 hour to somewhat top out with the overnight session tonight. Thank you, George. Oh, options going to Tim. Stocks only go down. The counterbalance. I'd actually love to see that. Then we get stocks only go up, stocks only go down. So just pay attention with daily cycles getting to the top and weekly cycles not yet bottoming. NASDAQ also low volume. Look at the NASDAQ volume. You want to talk about pathetic. You're up 2.83%, and this volume. I mean, that was nothing. If you traded futures, options 22, you could have done more volume than that single-handedly. So, closing above a key level, the next area I'm watching for minor will be 12,745 to 12,750. Then I'm at 12,800 to 12,831, which will be returned to the breakdown zone. Cycles not yet at the top, not yet overbought. Pretty much 4 hour at the top, so watching for that pullback with the overnight session. The first level support is about 12,336. Next key area, if we do get below that, you have a little clear path move from Friday's insanity back to 12,538. 12,538 would reconnect us with the 4 hour rotation zone. Can't get overly bearish until we start breaking down with the gap fill play, at least without a topping pattern. Dow, next target. The Dow is really lagging this. Dow, my next target, sitting against that 50-day. Next target, if we do continue higher, is 32,500. Then we'd be looking at about the next major one is 32.9. Support coming in on the Dow, the very minor support. is coming in right about 32,210. More significant is about 32,100. I'll just leave that line there. Can't really. Then we're about to 32,000. Can't get bearish without the gap play on there. I'm going to blaze through that real quick because I'd be more focused on, sorry about the dog barking, on the S&P and the NASDAQ overnight. Russell, my next target is 1900 through 1885. Pullback level coming in about 1870. Then still I'm using the other levels, 1851. The DAX, come on. Then I'll get to the dollar and other things. The DAX, starting to really keep an eye on this. Did not get a close above the rotation zone at a very significant level, 13,080 to 13,100. So going to start more aggressively watching for the rollover move in the DAX. If it does push higher, major resistance 13,170. I'm watching for it, though, to break back below to confirm a topping area about 13,000 in the DAX. Notes. This was pretty bearish price action. 2 days in a row rejected from the rotation zone, closing near the lows. Very bearish bar on Friday at cycles tops. So I'm watching for a break below 115.13. And then we should be targeting 115.07. And then I'm watching between 115.07 and 114.07 for a bottoming pattern. But my next intermediate target is 114.09. If you want the shorter term, I'd just be using your shorter term harmonics over there. But I'm watching forward to see how it reacts in this for a major bottoming pattern with dailies rolling over and weeklies not yet turning up. So once we get, this will be interesting. Once we get daily cycles back to the bottom with weekly cycles back to the bottom, if we do get a bottoming formation here, I'm really getting interested in the notes play. Dollar index, and I'll glance at UUP. So far, holding the daily rotation zone. Yes, this would be a potential head and shoulders. It's still too early, so I'm watching on this follow-through bounce. We're getting the daily cycle bottom. We do not have a strong topping pattern. Weekly cycle top, daily cycle bottom. So this will be very interesting in the dollar play. Because we could come up, form a right-hand shoulder on a head and shoulder top. So I'm paying attention to 109.57 to 109.87 for a potential shoulder top if it can get that high. That's what I'm paying attention for. I'm not getting overly bearish yet on the dollar. If it does continue a bit lower, there's still major support at 107, and then we could see another bounce play. So right now, I'm more in neutral mode on the dollar unless we can start really getting above this 109.87. If we start getting above that, especially with the daily close, then I'll shift back to short-term bullish mode. Let's glance at UUP for the people who don't play the futures but want to play the Invesco US dollar fund. What I would watch for on this is going to be sloppier than the futures, but you'd have a left shoulder ahead. The right shoulder is not even about being formed yet, but what I'd be watching for on UUP is 29.40 to 29.46, and you see you clearly have the gap there. Intermediate going in tomorrow, I'd use 29.28 to 29.34 for tomorrow. But I'd be keying off the futures. We should get a bounce in this area. Even if we press lower, then I just update these harmonics lower and then watch for the bounce with UUP. So right now, I would be in neutral mode unless we break below Friday's lows. We break below Friday's lows. The key area I would be targeting would be roughly about 29 to 29.05 for some support and then a potential bounce play. If we break above Friday's highs, then I'd be targeting 29.28 and 29.34 in UUP. VIX, we'll take a look at tomorrow morning. But essentially, if we start breaking both Friday's lows, I will stay in stronger bull mode and be targeting 22. Crude got that follow through. Cycle still not at the top. At the breakdown zone, returning to the rotation zone. So anywhere between this 87 to about going in front of the rotation zone a bit to about 88.78. Let me put on the retracement harmonics also. I will start watching for another rollover play in this area. So, yeah, no, I'm going up to 89.43. So anywhere between 87.37 to 89.43, I'm watching for a potential topping rollover place with cycles not being at the top yet on crude. In order for me to get more bullish in the short term, I need a close above about 91.50. Nothing going on yet in natty gas. I already talked about that on Friday. Gold. I'm still watching. Yes, you have a confirmed but not triggered double bottom. It's lower probabilities. It's against the rotation zone. This has to at least trigger on a daily close above 1737. The yen. Again, they're trying to talk down the yen a bit. Watching still for a little more pullback. A little more pullback before the next major push higher in the yen. Let me take these off. I don't think we're fully done yet, but they're trying to talk it down a bit. Come on, mouse. So look at this thing of beauty. So I will be watching shorter term. I needed to get above about 144.22 for a play in that, and that would target the most recent highs. And then 146.81, I'll get really interested if we push up to 148.62 for a substantial rollover play. Euro, I just don't have a fantastic setup yet on it. So below 99.90, then I'll target the pullback. If we do start breaking above 100.80, then I'll play for Friday's highs again. Other than that, I don't have a great setup. Bitcoin, we're getting that relief rally off the 87.5 harmonics. We'll be watching anywhere between this 21,870 to 22,706 for a rollover play, unless we get the close above 22,706. Tesla finished that double. If it continues, cycles are at the top, but not yet rolling over. It's against pretty substantial resistance. But if we do get the push above 302, we'll be targeting the return to about 310. Other than that, the only bearish thing is to the gap fill play, since the double top got stopped out, but the double bottom did work. So not a lot of bearish setups just yet. Where else do we have? I know you had a... Hello, Lauren. Yeah, it's my wedding anniversary today. 18 years. I think CPI won't change much either direction. Gas got pumped for Labor Day. Food is still ridiculous. House prices down only slightly. I think the Cleveland Fed is still projecting 8.2 or 8.3%, and they've only been wrong or undershot it like 3 times in the history. So I'm still thinking that it's going to be elevated in the 8%, which, it might be down still from last month, but that's not a major easing CPI. Then even the Fed will be shocked at that one if it drops below 7.5. Where did you had a stock in here? Where was it? I wish there was an easy way to filter the comments. Sterling, I thought you had a stock listed in here that you wanted to look at. Oh, you. There it is. Unity Software. It's got a little more potential upside. Had aggressive buy on Friday. I don't know if I could get proper reward to risk though, because 42.57 to the upside. There's no double. It was just a sloppy horizontal breakout. I don't know. Yeah, 42.57 to 42.90 would be the next target. So I don't know if I could get my at least reward to risk for me. What else do we have? There's a ton of money sitting out these moves up. That's why I was saying, that's why I'm pointing out the volume. Because, and also you don't have, when you have meme stocks and no PE ratio stocks leading the recovery rally, it's not like we're getting a broad-based, I'm going to start accumulating a lot of quality stocks yet. We're not getting that on this rally. So that's the other thing. And can the rally continue? Yeah, but this is not the thing a bottom is made of yet. Oh, thank you, Lauren. Stock, yeah. What are you seeing, Sterling? I mean, we use aggressive counter trend buy, but it's really tight to the upside. This would be more something I'd be watching for the next rollover play. I'd have to do some other analysis. See, it's again, you got it. I just can't get bullish on these stocks yet. I mean, yeah, they beat earnings, but it's no P to E. This is another crap rally stock. Big. This is exactly what I'm talking about. Look at what it did on Friday. I mean, yeah, this had the volume, but look at the volume of the broad market. But this had the volume, and it's another no PE stock. I'd be watching this for a rollover play personally. Dinner, surf and turf? No. We're not cooking tonight. It's raining here. I'd normally grill, but it's absolutely downpour here. I'm doing a Lou Malnati's pizza. So, yeah, Lauren, 310 is my next target on Tesla. I mean, yeah, 310. Yeah, I already went over ES. I started off with that. It's at the beginning of the live stream, about 6 or 7 minutes into it. So watch that replay. All recent dips are getting bought with volume, maybe a takeover target. It's nothing that I'd be playing personally. I'd be watching for the rollover play. A lot of these stocks that are, it's more of a low. It's more of a crappy. I'd have to do a little more research from a fundamental perspective on this. I don't think it's a takeover play in this environment. You still have negative earnings, revenue missed. It's still being traded as a go-go stock on dips. This is just a go-go stock play. Remember here, look at your run up from into that on a rally into you had that. Remember from our last rally remember this rally, the big rally in before this last little rollover and the head and shoulders top. If you take a look at you, what did you do? Another big rally. So this still goes in go-go mode for me. And actually, this rally's been weaker than the rally in July. I'd be watching for this for a short. Nothing I'd be really aggressively playing from the long side. You know, this is It's got no earnings. It missed on revenue. This thing will probably trade down to wonder let me this thing will probably trade down before this is said and done. I bet you it'll be in the single digits. It actually looks like this, just glancing at it. I have to do some more thorough analysis, but we could be in a corrective wave before the next final push lower in Unity. What's a rollover play? A rollover is something that a route. I'll give you an example just with Unity up here. A rollover play is, you see here, we have a concept, Martinez, good question, of the rotation zone. So the rotation zone is the 8 EMA and 20 win EMA. When the 8 is below the 21, I'm watching for short setups into that area and then a rollover. So let me just give an example. You got the cross, and we don't trade crosses. We don't just trade. It helps us keep us on the right area. And this is in a bull market. We watch for dip plays. When I talk about dip plays or continuation plays, that would be a dip into the rotation zone. And I'll give you another example of that in a second. A rollover play would be a rollover into the rotation zone. So you see here, rally into the rotation zone, rollover play. All right? See how that worked? So it's a negative. This is on a weekly basis. So, and you could do rollover plays on different time frames, but I'm focusing on the larger. So we have the rotation zone is a sell area. Rally, rollover. Rally, rollover. Then we've just flattened out. Now this rally, rollover. Even on a rally here would be a rollover play. As opposed to, I don't know, what's been strong. Let me just go back in time. For example, in a bull market, Apple, this would be a dip play, dip continuation play. Return to the rotation zone, continuation play or dip play. This is actually a buy signal. This is a buy signal that then topped out into the bear market. If you want shorter term stuff, see on the last run up in August, here's an example of a dip play. Rotation zones in our favor with Apple. Into the rotation zone, rotation play. Into the rotation zone, rotation play. Then we have what's called 8 pushing price. When you see a sideways movement, then the 8 catching up. That's a continuation play, but that's not a dip play. So that's the kind of stuff that you're watching for. By the way, I covered SMH. Semiconductors, I covered this in a weekly overview. If there is any more upside, it's very limited in semiconductors. So don't get married to semiconductor positions if you're playing them from the long side. I know there's some semi players in here, especially NVIDIA. Watch 146.20. You're welcome, Sterling. Again, you know, there's better things to play on the long side. There's still some value, nice value setups in that. Can you look at, hey, Richard, thank you for being here. Can I look at GEO? Sure. Geo Group. Geo Group, nice little breakout. If you're playing this only from the long side, watch for, in the next few days, especially this week, watch for a rollover play. Okay? What would start confirming that for me? This is a significant level right here. It just happens to be $8. That's not why I chose that level. All right? This is a significant level. So if you're trading this for a long play, if you get a daily close below $8, I'd watch for a pullback, especially back down to the breakout zone, 734. You have weekly cycles at the top. By the way, also a close below Friday's low, which would also close below $8. What was Friday's low? $8. And from a separate metric, it would be a sell signal, which is not a short signal. There's a difference between a sell signal and a go short signal. This would not be a short signal. You got the weekly rotation zone lower. And look at this, right at that $8, it's essentially the bottom of the daily rotation zone. You got the close below the rotation zone. Here's another example. We got the breakout play. Remember I showed you this level, this 734 level on the weekly, just a little instruction. So this was key resistance. Let me drop down to the daily. You got the breakout, all right? Got a little topping pattern here. Pull back to the daily rotation zone. Daily rotation zone's in your favor. And a retest of resistance becoming support with a decent bottoming candle. And I don't cover this all the time, but you want to just, if you want to do single candle harmonics, which do test out, that is... You see here, close. Let me see if I can really zoom in. This is just doing single candle harmonics, which I have tested. Closing in the top 25% of a daily candle range is a bullish candle after coming into the daily rotation zone. So this was a bullish candle. Aggressive play is you go long the close. The conservative play is you go long or the next day's open. The conservative play is you trade it on the break. And this is essentially a buy signal with the rotation, a %B buy signal also. And then a rotation back up. And now, it's... Then you use your reverse. This is a great area to use your reverse harmonics. Stop raise, take some profits off the table. And again, you're not trying to call the exact high. If you wanted to use your forward harmonics, they would have been from this. Let me see on the weekly. This kilo. So, as long as this holds, you're still in bullish mode with daily cycles to the top. This is a major topping area. Okay? So I'd at least be moving up an aggressive stop from the long side. Because if you get that close below 8, I'd be watching for a pullback into the weekly rotation zone, and that would take your weekly cycles back down. And as long as you stay above 734 on a weekly closing basis, I'd be looking for potential re-entries down there. It is not massively overvalued. So this thing can be traded as a fair value with technical bullish positions. Longer term, since it's fairly valued, longer term, if you were trying to play this for the longer term, I'd be watching for my next significant target area. And even if you don't trade this, learn to do the analysis. I don't care if you don't trade Geo Group. I'm trying to walk through this for structured analysis. My next target area, and this is where I'll use the longer term harmonics. The longer term harmonics I'd be looking at would be roughly about 970 to 989. 968, 970, top here, top here. I'd be watching for a top area then, and then beyond that, I would target the 200. So this is an area I'd definitely look to take some profits off and raise a stop, possibly re-add on a pullback play, and then eventually target. And that we're talking weeks out, not this week. But that's how I like to structure plays using all these tools. And just base it with also acknowledging that, hey, we're at an area that's very toppy. See, last time it was weekly tops, you got more of a sideways pullback, but it held key support. So you got that pullback move. So again, we're at topping area. I'd be watching for it to hold the key support area and then a possible re-entry move. That's how I like to dissect a stock chart. Is that why I say 310 for Tesla? You have a fair amount of topping price action out here. Also, if we put on your bigger retracement harmonics. Oh, sorry. 310 was, let me do something here. My next area for is right around 310, I should actually say 313 on my short term. We get above this. Should have gone back and just done the analysis. My next targets. So you have 311 to about 313. Go to 311 to 313. Above that, you get a close above that. 337 is the next target. You get a close above 337, then I will target your upper 300s. But until you get a close above 337, 311 to 313, I misspoke in that 310. Sorry about that. Then 337. Yeah, that's a good point, Sterling. There is the 1% excise tax for company buyback programs, especially if we start going into a more significant pullback mode again. That will be really putting a damper on buyback programs. All right, you want spiders and Qs, then I'm going to wrap this up. Qs, you triggered the double bottom, so 309.15, 311.85, 314.55. You're sitting against, it did not close above the daily rotation zone, but I'd be targeting this 309.15 tomorrow, and if it does continue stronger rally, this 311.85. Do not ignore this second target area with the 50% being right in front of it. Key pullback area now is 304. That's it for not yet at daily cycles at the top, so you might be able to eke out a little more going in Monday/Tuesday morning. Remember CPI Tuesday morning. Spiders also triggered but hit the first target. Spiders then the next target area above Friday's high. There is no great target area until about 410. Your pullback targets are roughly about 402.35, 402.50, and then it would be the gap fill. 400, 436. So that's where it sits, and it's against a key trend line, but I'd be really watching where this closes. Would not ignore this major resistance area, though, at this 410 area. 410 to 4. If it does peak through, I watch for potential topping highs to be 410.97, but key would be 410. Mike, back in August, you showed a purple moving average line to mark the rally turn bullish. Can you put it up again? The purple moving average? You mean my long-term thing? I do, shoot. This is nowhere to, again, I talked about it in a weekly sector overview. I didn't show the charts, but none of these are a long-term buy yet. They just have the short-term little patterns. That purple line actually is coming in right above the 62.5, which is the key area. Funny enough. On the S&P, on the NASDAQ, it's actually above there. But all these are still in medium-term sell mode. Ray Dalio predicts a horrible economic crisis where everything will collapse. All right. I could see it happening. I'm not predicting that. Ray Dalio says we're in stage 1 rebuilding. Read his newest book. What's the name of the newest book? I guess I could search for it, but if you have the title, could you type? Is this a good read? I'm just wondering if it's a good read. Yeah, there you go, George. All right. So yes, we're still in long or medium to long-term sell mode. You should watch the sector overview because you'll see a lot of sectors that are still in long-term sell mode, and the ones that didn't tip last week actually maintained a really decent buy mode. And I went over value versus growth, and a couple things still have a little more upside on the double bottom patterns. So that's where, all right, it's great. I'll check it out. Thank you. Maybe I can listen to it on audio book. I read so much on a regular basis, like a daily basis, my head starts spinning. So if I can just lay down at night when I can't sleep sometime and listen to audio books, I love to do that. Then at least I can give my eyes a rest. Go enjoy the fruit. Oh boy, Sterling. Oh boy. Thank you, everyone. Again, so I guess the message is within, now anything can shift on after CPI on Tuesday, but I am watching for topping patterns going into Monday night, Tuesday morning. That doesn't mean they have to trigger. I will be on the lookout for those. Thank you, George. I don't want the world to collapse. Sometimes you need things to pull back to get the good long-term valuations. Remember, we get a bigger pullback now with a proper bottom. If we stay in this valuation mode, the outlook with 10-year valuation, yeah, you can get some years with good return rallies and some years are just going to be dismal. I'd rather get it out of the way and get to some good market valuations where we can build long-term bottoms. I don't want a world collapse. I'd actually like to get all this juice out of the market to where you can get some better valuations from longer-term models. Because if you statistically look at the long-term valuation models, you don't have a high rate of yearly return from this kind of environment. So do I want everything to collapse? Not at all. Would I like some continued pullback to where we get some long-term great valuations? Yes, because it makes investing a hell of a lot easier. What are the moving averages used on your charts? I have a whole video. Sherry, thank you for being here. I appreciate everybody new turning in. I'll go over them real quick, but I have a whole video on the YouTube channels. The way I set up my charts, it tells you everything except for possibly a cycle indicator, which I can review sometimes later. I'll probably have to redo one. The red line, nothing's hidden here on these. The red line is a simple moving average. It's a simple 200. That's the one that tested out a best, not the exponential. The blue is a 21 exponential. The yellow/orange is a 8-period exponential, if it comes up. There you go. The green is a 50-period exponential. The only simple is the red 200. The green is used for support resistance only. The blue and orange are used for rotation zone concepts. The red is support resistance area. At the bottom, I have a 5-period RSI. I have a Bollinger Band %B indicator, and I have a stochastic RSI. The settings on that are at 833s. Everything else I use are harmonics, which are 12.5% intervals. Yes, Tesla PE still is high. All right, it's on Audible. I'll definitely check it out. With that, I'm going to wrap it up. Thank you, Amit. Tesla PE is still way too high. It's the only bearish thing. And Tesla's really hard to short because it's still a go-go stock. Tesla will have a big collapse at some point. That'll be tough to short because I think it'll happen like so rapidly. It'll be interesting. Nas Industry, thank you for being here. Again, hopefully everybody has a fantastic rest of your day. I'm wrapping this up for now. We've gone over an hour. I'll be back tomorrow morning to start off the week, and we'll fine-tune our Monday morning levels and watch for some continued follow-through. Yes, 833 for the stochastic RSI. If you haven't seen it, Ray Dalio did a well-produced, great content video everyone should watch. Principles for dealing with the changing world order. All right, I'm going to look that up. Thank you. I have not seen it, strategy. What's the Bollinger Band setting? That's one thing I have not given out yet because I'm putting that up for sale to support the channel. But that will be fully disclosed. I'm actually going to use that to help support the channel. So with that, I will wrap it up for now. Thank you for being here. Have a great rest of your day. Bye.